Hey everyone, it's Robin Cavallaro with the Robin Cavallaro Group of Remax 100, and we're going to do something fun today. And I have a new guinea pig to help me out. So I warned you.
Oh, I don't mind being a guinea pig. A guinea pig will be fun. So
Yeah. So this is Matt Wilson. I met you and Jim Wallace when we were in Vegas a little over a year ago. Y'all were you're both lenders down in Texas, and I met you through Brenda Mullen, who is retired Army, and she's been one of my victims on this too. And we had such a fun chat. But y'all were so kind to host an event for veterans. And this is where this idea kind of started from because someone's like, well, you're not a veteran. I'm like, oh, but I was a spouse for 21 years. So doesn't that count? And so, yeah, evidently not. Um, but with you, your brother-in-law is actually on active duty right now.
yeah, he's in the Air Force. He's up in Boston. He's been all over. He was down helping out with the launches at Cape Canaveral a few years back and whatnot. But yeah, he's a major.
Rose for a second.
They literally just had their awesome and I watch her carry the load like you talk about. He does a lot of the work and whatnot on base but she's got to take care of a lot of the stuff at home. She manages the social life too that you guys like the network that I have to see her communicate with and deal with it. I admire her big time. It's made her stretch big time. She was a high anxiety, high stress, but it's funny when we knew that she married Andrew, we were like, oh man, how's she going to handle this military life? And she's taken it like a champ. It really has made her a much stronger person, independent. We didn't think she'd be as independent as she is now, and it just goes to show that what the spouse has got to take on when
It's, it's not a fun
a
role to
different
be
life
in.
for sure. So
Yeah, it's definitely not a fun role to be in at times, but yeah, so thank you to your sister and her husband for what they're doing. So I put something on Facebook this morning and I wasn't quite expecting the reaction I got, but you never know. So let's play fact or fiction.
all right, let's do it.
Okay. So one of the thing, and one of my buyers said this to me on Friday. He said, and I'm going to leave the names of the major lenders out of this for the most part. Okay. There are going to be times that they'll get thrown in, but there's nothing going to be derogatory about them. So calm your knickers, just sit down, grab the popcorn, let's have fun. Disclaimers out there. So what he said is he was using Veterans United. And again, this is his interpretation, not what he was told by them. Disclaimer is there. Um, he thought they were part of the actual VA because of the name of the mortgage company. Fact or fiction?
That is definitely fiction. If you could give Veterans United the greatest credit they can receive is how well they market. They market, think they are the Veterans Association.
Yeah.
So they are not. They are just a independent mortgage company that focuses and targets veterans and active duty folks, but they are not associated with the VA.
So they're the same as y'all.
100%. And loan type only. I'll say there's a
Yeah.
big difference everywhere else.
Well, and that's what I'm saying, as far as
Yeah,
the ability to do it, because they can do a conventional loan, they can do an
yeah,
FHA. They just came up with probably one of the best marketing tools possible, and they knocked it out of the ballpark with their name. So
100%. Yeah,
kudos to them.
yeah.
Whoever was sitting in the back room um, the pulling that name out, awesome. You did a phenomenal job. So,
For a paycheck.
yeah, but again, so many people assume because of the name that they are tied directly to the VA.
Yeah.
Is there any mortgage company that is tied directly to the VA?
Fiction. No, there's not. There's no one that's tied. The VA does not issue loans. They only guarantee the loans, meaning if they meet the guidelines that the lender or the mortgage company meets the guidelines established, then they will guarantee the loan. There's other details that aren't super relevant as to what they guarantee and how much they guarantee, but it meets the VA guidelines, then it.
Yeah, but every now and then you break up for just a hair. So, I think you're frozen once more.
Right now.
Yeah. Yeah, Matt, every now and then you freeze for just a split second. So I'm not sure.
Okay. Do I
So
need to
we'll
repeat
just-
anything there? I'm watching it freeze. I can tell when it's happening. It's a little frustrating, but
Yeah, it's, modern technology. Sorry guys, this is the reality of being live. Glitches and all. One day I'm gonna put together bloopers from all my videos so y'all can just sit back and laugh. And yeah, that'll be right before I start doing Mrs. Maisel with all my stories from some of these deals I work on. So the other thing that I hear a lot is that when you're buying a house with a VA loan, that the VA, the actual Veterans Association, is going to send out an inspector to check the property.
So yeah, no fiction. So and we're talking about the appraisal, right?
Correct. Yes,
Yeah.
but a
So
lot of people think that's going to be a VA inspection.
yeah, so the VA does assign the appraiser. So when the appraisal process works, the lender orders it through the VA. We go into the VA portal, we punch in all the information, the address, upload the contract, and then the VA, through the VA portal, a representative will go through. It's probably automated. It's probably not even a representative. We'll go through the list of VA certified appraisers, and it will go out to a local appraiser in that market who has been certified by the VA to do VA appraisals, and it'll get assigned to them.
But y'all don't get to go in and go, oh, this guy over here always gives me the right value, the least drama, he's easy, so I'm going to pick him.
No, we don't get to do that. The VA picks them, and then you can ask for reassignment and things like that, but that's not super common. So yeah, the lender has no real control over who is the appraiser when it comes to a VA loan.
And that's the part where so many people think that they don't, I've had to educate some buyers on the fact you need to do your inspections.
Mm-hmm.
The VA is not going to do them for them. Yeah, they're going to look at the major stuff, like if they can step back and see the roof looks like it's in god-awful horrible condition,
Right.
or you're missing a railing on 3 or more steps. You got giant holes in the wall, you're missing flooring. Those are going to be the red flags. But they're not crawling under that house and looking at the foundation. They're not testing the electrical, the plumbing, all of that good stuff. No, that's for local guys, write them a check, they do it, they give you the report, then we negotiate it.
Yeah.
The other part, one of the other ones is that you can only do a VA loan once in your lifetime.
Yeah, that's a big fact, a big fat fiction. Yeah, no, you can actually do the VA loan as many times as you want, as long as you can qualify for it. There's no limit to how many times you can do it. You can even have multiple VA loans at once. And so, yeah, your ability to put no money down might be affected the more VA loans you have outstanding, but the ability to use the VA loan is essentially unlimited.
And I would say my ex and I were in that category of believing that until I got into the business. Because when we bought our house in Connecticut, it was our third house in 7 years. Each one we did an 80-15-5 or 80-10-10, which meant 80% in the first one and either 10 or 15% in the second mortgage, and then 5 or 10% down. So when we came to Maryland, and we're like, we're going to save our VA loan for our forever house, our most expensive one. So when we came to Maryland, we used it because keep in mind, it was 2010. Yeah, we all know what was happening there. And the house we bought in Connecticut, we bought in 2006. We closed on it 3 months before the market crashed up there, got talked into an interest-only mortgage. Yeah. Mhm. I am your what not to do. Let's just put it out there. Okay. Do as I say, not as I did. You'll be fine. And so we had to write a check for about $40,000 at the table to sell that house. But we were one of the lucky ones because so many other people were bringing so much more to the table. We only lost 10% of the value of that house, where I was watching clients lose up to 50%.
Yeah.
Yeah. Great realtor. Man, I should work it out. So, because I was the realtor who sold my house in Connecticut. So when we moved here, we used our VA loan because we had just taken our liquid cash to get out of what was still going down and getting worse and worse and worse by the day up there. And it was at that point, we're looking at this like, thank God we have this available to us because we can buy a house we're comfortable with no money down.
Yeah.
And back then there were the MSAs. So we were buying in Calvert. So Calvert was an MSA to DC, where some of the other counties around us were not. So the funding, the limit and where we were buying was higher and we couldn't buy what we wanted in a different county. But that's all changed, correct?
That has changed. I couldn't tell you exactly how recently, but it's been within the last 2 years that the max VA financing, essentially the cap was removed. It used to be up to whatever the conforming limit that you were talking about, the county limit. You could go up to that without having to put a down payment. Now, if you have full benefits available on your VA home loan, you can go up to 100% to any amount without a down payment.
See, that amazes me because you do have some very high ranking military people, or they're married to people who have very well paying jobs, and they may be looking to buy that $1 million plus house on the water that they can afford. I can't, but you know, that's a whole different story. We'll just sit here and live vicariously. But they can still buy that 100% financing with a VA loan.
Yeah.
Yeah. So let's go back to fact or fiction. I'm a seller. It's going to be harder for me to sell my house and cost me more money if the buyers, I think you froze.
Yeah, I missed the first part. If you don't
Okay.
mind going again.
All right. So as a seller, it's going to cost me more money and be harder to sell my house and get to the settlement table, and my house won't appraise if I have a VA buyer.
It's completely false. Fiction, entire fiction.
Yeah.
It's kind of a myth that's been around for a long time. I started doing VA loans in 2011. Is kind of when I first got introduced to the mortgage industry, and started picking it up quite a bit a few years later than that. And ever since then, it's still been the same. It's like, oh, there's so much red tape, and the values always come back lower. And it's just not true. The appraisers don't change their value assessments based on the loan type. That all the same market data impacts the value of the house regardless of the loan type. I would actually counter, Robin, that the VA loan gives you a better shot at hitting value because it has an inherent it's called a tidewater notice. So if the appraiser says the value is going to come in, he gives you 3 days or 2 business days rather to rebut it. Right? He says he'll notify the lender and say, hey, I'm coming in low. He won't tell us how low, but he tells us you got 48 business hours to get me comps to support the value. Whereas a conventional loan, FHA loan, you don't get that kind of opportunity. And so the VA loan actually helps give you that chance. But from a pure assessment standpoint, the VA loan does, on average, I think they've even run the statistics. You don't get lower appraised values at a VA loan than you do a conventional loan.
No, and that's what I've consistently seen across the board is that it's going to come in fair.
Yeah.
And I've had a couple of instances, because keep in mind, we're small town. We're most of Southern Maryland is about this big. Okay. And, I joke that Calvert has 92,000 people or 93,000 now. Based on the birth announcements I've been seeing on Facebook, we might be 93. And I think 50,000 of them are realtors, but whole different story. So the bottom line is, because we all know each other and we all work with the same people over and over again, there was one time a few weeks ago where the appraisal did not come in at value. The appraiser called me. I was a buyer's agent. And I'm like, don't know what to do. And so I reached out to the listing agent. Unfortunately, she was tied up. But the reality is, we could not produce any comps to justify where we were. The seller ended up agreeing to the appraised value. But again, it was a very fair one.
Yeah.
It wasn't coming and going, oh, your VA, so we're going to take what it really should be under conventional, and we're going to drop it down about 5%. You'll be fine with that, right?
Right. Yeah, that ain't happening.
No.
And you know what's interesting, Robin, is it's more than likely you wouldn't even gotten that phone call if it wasn't a VA loan.
Oh, no, absolutely not.
Yeah,
It would have been like, all we would have gotten from the lender is a notification that it did not appraise.
correct. Yep.
And good luck, seriously, good luck reaching those appraisers and discussing with them why they should renegotiate with you or reconsider, because they're not, you know.
Yeah,
Okay.
those appraisers want to do VA loans,
Mhm.
and because it opens a whole new opportunity to do more business. And if they don't treat the veterans right, if they don't build those good relationships with these realtors and whatnot, because Jim and I have had to go to the VA and complain about some VA appraisers before, and when you do that, they change their tune because they know that's a good percentage of their business, and so that alone just totally negates the myth that a VA appraisal is worse than everything else. No, they want that business, and they know that they have to bend over backwards to help veterans and stay fair. They can't be less than fair with veterans. They try, actually. We've seen appraisers try extra hard to do what's best for veterans.
And that's the thing that I've seen too is, obviously my heart and soul is with the military. It was my life. My dad was in the military long before I was born. And you know, that he wasn't diehard. My older brother did it for a few years. My younger brother, he was active with the 82nd, then got out and did Green Beret reserves. I think you probably,
There you go.
so it's like, in my family, almost every male has served in some capacity, which is amazing. And I just assumed everybody's family was like that until I got outside my little bubble. Um, but it baffles my brain so many times, the misinformation that's out there. And especially with some other agents that go, no, 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 my seller will not consider a VA loan because they don't have any skin in the game. I'm like, well, their skin in the game was over in Iraq or Afghanistan or where. I'm like, why is it that, you don't want to do 100% financing because it's a VA loan versus someone who's doing conventional with 20% down? At the end of the day, the money going into your seller's pocket is the same, whether it came out of their investment account and a loan or strictly from the loan.
Right. Right. Well, and then there's the earnest money is really the skin in the game. Like the down payment, like it's such a silly notion to say that. I agree with you. The skin in the game is the service they've rendered. And Jim and I, we make it a policy. We always offer to call the listing agents on every offer that goes in because we want to help correct any of these misconceptions about what this VA offer really means. And what people don't realize is, especially the active duty folks, our active duty families, they're stable income. They, because of the life they have to live, they usually have pretty straightforward credit, good income, easy to qualify. These folks aren't like fringe approvals. Our active duty folks are typically our most qualified folks there are. And same with a lot of our retired folks who've been in there 20 years. You guys, they're great. They're great loans. They're typically our better qualifying loans.
Well, and you figure in my area, I've got Andrews, which hosts Air Force One, and you've got the Pentagon, you've got
Mhm.
Coast Guard headquarters, and you've got Patuxent Naval Base where you do a lot of the test flights. They're not letting someone in there who's sketchy with a little $500, 500 credit score
Mhm.
because of the simple fact that I learned this through my ex. You know, if you have a low credit score, you are deemed a higher risk at espionage
Wow.
because you're dirt poor, you need something, and you're more likely to sell your soul in your country to get what you want.
Yeah.
Yeah. So
Well,
it's
I was going to say, and this is a shout out to the spouses as well, because you know who usually controls those finances and keeps everything tight to go. It's the spouses who do it. They really do. I would say 80% of all communications we do in our VA loans, whether both spouses are on it or not, is with the spouse who's not serving. That he or she is the one who's got to man that side of it and really take care of those finances and get the documents. It's we're always relieved when we get our active duty applications, especially because it's just like we know these people, they're used to timelines, they're used to everything, and we love it. They're our
it,
best growers.
and moving is not an option.
Right.
You know, every time my ex would come home and go, I got orders, I'm like, murder is still illegal. So we are moving. So yeah. All right. So one more with fact or fiction. Maybe may come up with another one. All right. So lenders work bankers hours. You're available 9 to 5, Monday through Friday.
That I can speak specifically to Gemini. That is fiction, and so we stay available. Essentially, realtor hours is what we like to stay available because we know that people work 9 to 5 and they can't do the house shopping stuff between 9 to 5. So we have a game that Jim and I have put together. We've shared with folks, and it's a Jeopardy style game. And this big bonus question is, what do you do if you can't get a hold of Matt or Jim before 10 o'clock local time? Uh, and the answer is call the police. so we make sure that we're always available. And the sad truth is, the bigger, well-known VA lenders like the Veterans United, the USAAs, Navy Feds, they I call them 1-800 lenders because you got to call a 1-800 number to get them. Whereas I don't even put my office number on my signature; it's just my cell phone. If my cell phone's not available, then if I don't put my cell phone available, then my office phone means nothing to me. Like so, and that's the same with Jim. It's just we don't work bank hours, that's for sure. You know, we're a bank.
Compliance reasons for the state of Maryland, I have to put my broker's number on everything that you see, either my cell number or my email address. And so at the same time, you're never going to reach me there. Never. If, typically I go into the office on Mondays, or at least I try to, and that's my paperwork day. Just justify the space, show up, pop in. And then I do get to chit chat with some people I work with too, and build the relationships there. But most of my stuff, if I'm not with clients, I'm sitting in my home office. And it's like when I do these Zoom calls, I don't sit in my home office because I have my children's baby pictures behind me, and I do not want that out there in video.
Right.
So, plus when I painted, some paint sprinkled down the door and it looks weird and it could possibly look like I killed someone and the blood is still draining down. So we know people are going to be all judgy and cannot do that in my home. So it's
Yeah, no, we have to we get kicked out of our office. Jim and I like to work in the office because we feel super productive. But when we get home, I know Jim does the same thing. It's up to the office at home, plug in the computer and make sure we're available for when those calls come. And without fail, my wife, we've been married 13 years going on this year, and she knows that even though I get home, I may walk in between 4:30 or 5. She's like, "How much work do you have left to do?" Because she knows it's not over. And I was like, well, it picks up between 4 and 6. Just that people get off work. They're like, hey, we looked at this house. What do you think? And it's the nature of the business. And you have to do that though. You have to do that because if you don't make yourself available to do that, then you're going to miss out. You could, I don't want to be the reason that a military service member or their spouse misses out on the home of their dreams. I don't want to be that reason. And I got to be available to help them with that.
So thankfully we got the deal closed, but my liver got bumped up on the liver transplant list because of the experience. And I'm gonna leave out which national one it was. But we called them at 4:50 on a Friday afternoon to get a pre-approval letter. I got the pre-approval letter at 10:30 Monday morning.
Yeah, no, that
Thank
doesn't work.
Thank God there were no other offers on the table. And this is even after my clients calling the 1-800 number, emailing the supervisor's supervisor, and we had no response at all. None. And I kept trying to convince them to work with a local lender. But this national one gave the impression to my buyer that because he was a co-borrower, not the primary borrower, they were using the wife's information, that he didn't have to provide any documentation regarding his income or assets. And then all of a sudden he had to. But my local lender up front is saying, give me the stuff I need to confirm your income, to confirm all this. And I understand from his point of view, if you're told you don't have to by one person,
Yeah,
why would you jump to someone else that now says you have to?
yeah.
And, and it was the most frustrating, aggravating, stressful situation. And because they weren't communicating directly with me, every time there was a glitch, I had to text them and say, please call and get this information. So to me, I put my buyer on an emotional roller coaster that they should not have been on.
Yeah.
Now, so when you're working with a loan, are you communicating the issues with the agent or with the buyer first?
So depending on the issue, usually property issues, we're going straight to the agent first. And so we don't, if it's something that we can resolve without stressing out our buyer, then we resolve it with you. On the buyer side of things, if we have issues on the lending side that we're super concerned about, we're going to get with you. If we're having communication issues for some reason, the buyer or borrower is just not getting with us about some documents that we need, it's usually like, hey, all right, I'm calling Robin. Robin, can you give her a nudge here? Because we got to get this in and whatnot. Because I know you care just as much as we do about getting it done and whatnot. So yeah, we typically communicate to everybody on everything. On the loan side, I will say there's a lot of stuff that happens on the loan side that would stress our realtors out big time. that we wait until we absolutely have to, because Jim and I, we don't want you, we already know what you're going through, so we'll bear the brunt of that and we'll get it figured out. And one of the unique things that we have being at the bank we're at is we've pulled it would not have been a
All right, so
I'm back. I'm
yeah,
back.
yeah. So
Yeah. Yeah, we had a buyer who we knew for sure would not have been approved anywhere else after a piece of information was given to us after the application that an underwriter saw. That an underwriter normally would have been like, I can't do this. And our underwriter was like, hey, I need you to go back and clarify with this borrower what they actually meant and whatnot. And so we love our bank because our underwriters are literally 25 feet away from me. My processors are on the other side of this wall, and Lynette, who's also on our team, she's right there on the other side of this wall. The communication is so quick and easy to do that we usually won't take we won't take issues on the loan and take it to your lap yet, Robin, until we know that it's something you need to know about. We exhaust all things to get it resolved beforehand, and we have the ability to do that a lot of banks don't. We've done things here at Armed Forces Bank that there's not a chance in the world the Navy Fed or USAA or Veterans United could ever do. And it's because it's a family owned bank is why.
Yeah.
And I'm actually sitting in our operation manager's chair right now because my office was not working. I'm in here enjoying it right here. I did bring Jim's plaque behind me to represent, since he's not here. Let everybody know where we ranked in VA volume, top in the country the last 2 years. And so because we do a lot.
Yeah, that's awesome. And because I'm a solutions person. If you come to me with a problem, there's no time to get all bent out of shape or upset or have a panic attack or meltdown or whatever like that. We can do that later. Let's brainstorm and find a solution. And then we can go to the client and say, by the way, we're dealing with this. We need to bring this to your attention. However, here's the solution. So and I'll tell them up front, I need you not to react until I tell you the entire thing, because it's not going to be as bad at the end as it sounds like in the beginning. And so it's like they realize they're aware of the problem, but now they know there's a solution in place and they don't have to do anything.
Yeah.
Because I made the mistake one time with a client where there was a little bit of a bump in the road, and the other agent and I got it resolved and everything worked out well. And it's like, all right, didn't stress my client out. They were going through enough. And we're sitting at the settlement table and the seller says something about it. And I'm like, oh God, here we go. And my buyer looks at me, I go, it was resolved. It was not a big deal. It all worked out. And I didn't want to make your life any more stressful than it already was. And they're like, thank you. But at the same time, you're like, oh my God, now you just got stressed out of the settlement table. I'm like, we need to just put this in the vault, never talk about it again. So,
yeah, no, and I think that's the part of the responsibility with the lender and agent relationship is to be able to take a lot of that off the plate of most of the parties, right? Our best referral partners that we have are agents across the country because we do business everywhere. We've got some strong relationships where we can have these frank conversations like, hey, here's the situation, here's the problem, here's our solution. How do you see that fitting with it and whatnot? We become advocates for each other and knocking these things out. It's important to have that trust between your lender and agent for sure.
It's critical. And it's critical to be able to talk to someone. I tell my clients up front that typically I answer my phone 8 a.m. to 7 p.m. Monday through Sunday, unless I'm an appointment. And if we're not negotiating, I will probably just call you back the next morning so I can have some downtime at the end of the day. However, that happens about 50% of the time, because all of a sudden you get that you're going and cleaning up your email at the end of the day and you see something that popped up, and now all of a sudden it's like, so I'll be texting with the lender because I'm like, all right, I don't want to call you after 7 unless it's urgent, but I'll text and we can brainstorm. And then finally gets to the point, I'm like, okay, let's just do a 5-minute call, get this over with, and everyone get back to your wine or Tito's or Netflix or whatever, and go on with our day. Yeah. So what is the best advice you can give to a veteran who's going out looking for a home loan and says, I must use one of the big guys because that's what they do best?
The best advice is listen to your realtor in that situation, because I've yet to meet a realtor that prefers those folks be using those big banks. The truth is you're going to save significant amounts of money not doing that. There's always these big fees associated with these bigger national lenders, the VA specific branded ones that could cost you house. Like that money can cost you house. You may not be able to get what you actually can elsewhere if you use that lender. And it's important to have someone who's available, and you just don't get that same service, right? We picked up an agent that started using us regularly because they had a client that was using one of those big lenders that we talked about. And they had a pre-approval letter, but all they had done is just punch a bunch of information on the computer. And they automatically said, you're pre-approved, here's your letter. And they thought they were good to go. And come to find out, they were not good to go. And they put an offer in on a house and were under contract and this lender said, we can't do it, sorry. And we had recently closed a deal with that agent, and they were the listing agent. And she's like, hey, call up these guys. These guys pulled a miracle off on this last deal. And we ended up making it work and found out like, hey, we don't have any extra guidelines that the VA doesn't have. A lot of these other guys will put caps on what they can approve, even though the VA says yes. And we don't do that and whatnot. And you need somebody who can do that, even if your loan's easy peasy, you know, your active duty, straightforward qualifier. You just want someone who will communicate with you, honestly. And I couldn't, in good conscience, charge people 1% just to do the loan. I mean, that's how we operate. And when you're buying in your market, Robin, homes aren't cheap out there, are they? No, 1% on your average home is a lot of money.
It depends on where you are. You can get anything from 300,000 up to 20 million.
Right.
I've never sold one in 20 million, but I am available if you'd like to go.
Me too.
Get pre-approved, let's go. Because I can give you the same service, really can. So, all right, but you brought up something that triggered one more thought in my little head.
Yeah.
So one of the things that I hear a lot coming from these big lenders, and the reason why we're picking on them is the lack of communication with a dedicated loan officer and the client.
Yeah.
And I think that's where our number one problem comes from. So they'll come to me and they go, we're pre-approved at 6%. Okay, but now depending on where the market goes and where the rate is when they go to lock in, it may now be 6.5%. Because the rates look like an EKG rate,
Right.
reading. We don't know where they're going to be at any given time. But it's controlling the expectation to say that was the rate at that moment in time in the day, because the rates can change throughout the day, correct?
They do. They've been a little bit flat the last week and a half, but in the tumultuous market we've been in the last 2 years, we've seen some pretty wicked movements in a single day. We've seen it. It's not super common, but it's happened way more in the last 2 years than it probably had in the previous 10. And so yeah, that stuff can affect it. And it's important to know that. It's important for your borrower to know that, hey, this is what we're using to qualify you on. The market rate right now is this. And to let you know, we usually will tell them, here's your cap. Like, this is where your most the highest you can get approved at. If rates go up higher, this might go down a little bit, and vice versa. If rates drop, maybe we can get you a little bit more, but it's important to know that up front. And a lot of folks think their rate is locked in as soon as they're pre-approved, and it's just not. There are some options out there to lock a rate without a house, but those rates typically aren't great. And so you typically lock your rate in once you're under contract. Once you have an agreement to buy a house, the rate lock is attached to the property, and that's when you actually lock your rate in. And so it's important to have those conversations prior so that your borrower knows that.
And because of where I'm seeing rates all over the place, I want my buyers to understand when they're getting pre-approved. Okay, here you are at today's rate. If the rate goes up 1%, which there have been times that we've seen almost a 1% swing, here's where you will be if the rate hits that number. And then I want to step back and say, okay, what is your comfort zone? What is your monthly amount that you can pay without crying each month and without having to give up ever going out to eat again, the thought of ever doing a vacation again, and understanding that you're going to be walking if your car dies because you have no money.
Right.
So let's figure out that comfort zone and make sure you stay in there, because I don't want that call of I need to do a short sale because I can't afford this house anymore.
Right. Yeah.
Yeah. And And that's the worst call in the world that you get. And it's not fun to have that very awkward conversation with someone who says, I know you bought 2 years ago. The market's not going up 20% anymore. You're bringing this amount to the table, or we got to figure out a solution.
Yeah.
And
I was going to say that this going back to the benefit of that VA loan too, is I'm sure the interest rate reduction loan that you can do as a refinance for the VA loan is awesome, because if you run into those that point in your life where all of a sudden finances are tighter than they were when you bought it and the house feels tight, maybe if the market's dropped enough, you can do a no income qualification rate reduction on it, and which really saves a lot of borrowers and whatnot.
Yeah.
And what's really interesting about that is, even if you keep that house, Jim and I have talked to a lot of our clients about the benefit of using the VA loan as an investment tool as well. Because the VA loan inherently has a lower rate than conventional. For most lenders, some lenders don't like to price them that way, but typically they're usually between a quarter to a full 0.5% or 0.5% lower than a conventional rate. And they're usually 1.5 right now lower than an investment property interest rate.
Yeah.
Those are really expensive right now. But you can move out of your home that you bought with the VA loan, use your VA loan again, and rent out that property, and you get to keep the low VA rate on it, and you don't have to give it up.
And we've been seeing a lot of our military in this area that it's highly likely they're coming back to the DC area.
Mm-hmm.
So instead of selling and taking the equity they have in their house now, they're choosing to rent the property out because they don't want to give up the rates in the 2s and 3s.
Yep.
And so they're going to either live on base or rent something where they're going, because they may only be gone for 2 to 4 years.
Right.
And then come back, and then they'll have their house waiting for them, provided tenants don't destroy it. So let's talk real quick or briefly, if we can, about the assumption of a VA loan.
Sure.
So, and we're going to do it generically, because I know each lender is different.
Mm-hmm.
So fact or fiction here. If a buyer wants to buy a house and assume the seller's VA loan, can he pick any lender he wants to use?
Fiction. No, he cannot. The only one who can process the assumption is the current servicer of the VA loan. So whoever the owner is making their payments to, that's who would process the assumption.
And so is there any incentive whatsoever to the lender to make that a priority and do a quick process of it?
None that I'm aware of. I have yet to figure out where they would be incentivized to do that. All I've heard are horror stories that come out of that typically.
I've heard of one that took up to 9 months.
Yeah.
Because to me, it seems like the lenders are treating it almost like a short sale. Where they're like dragging their feet, and I think it would be easier to get a toddler without a nap to clean up his playroom than it is to get these lenders to move these loans along quicker, which I think is so unfair, because they push the fact that it's assumable as a selling point, but it really isn't. And then what happens with, let's say, we're going to use easy numbers here.
Okay.
You're buying the house at $500,000. There's a $400,000 mortgage on there. What happens with that $100,000 difference?
If you're going to assume that loan, you have to pay that difference out of pocket. You have to have that in cash, essentially, to buy that house. You can't finance that $100,000. Theoretically, you could find a lender to do it. Jim and I have yet to find a lender who would. So nobody wants to do a second mortgage on a house on that situation and not own the first mortgage. And so it's tough. People don't realize you got to come out of pocket. And I'll let you ask another question, but I have another really important piece to add to the assumptions that a lot of folks don't realize as well. But the veteran who's selling the house, their entitlement or their VA benefits, if they allow a non-veteran to assume it, because anybody can assume it, their entitlement stays tied up into that house. It doesn't get freed up so they can use their full benefits elsewhere. They're going to have to use second tier or second level benefits to buy another house. And sometimes if you don't have a great realtor to communicate that, next thing you know, you sold your house through an assumable, but you didn't free up your VA benefits, and no one talked about it.
And now you're forever tied to this house.
Correct.
And
Correct.
then it does get complicated too, and you can actually be penalized if the person who assumes your loan goes to foreclosure.
Yeah. Yeah.
Uh,
You have to be real careful about that. As an investor or the purchaser, if you've got the cash and you have this assumable loan opportunity and the seller has all the time in the world for it to process and you have all the time in the world to process it, an assumable can be a fantastic thing. It really can. But there's just it's sometimes it's oversold like it's some simple process when it's just really not.
Hey, it almost seems like a marketing tactic
Yeah.
to say, "Ooh, assumable loan at 2%." But what they don't understand is you're bringing basically 20% to the table. And you have to have a infinite amount of time and patience. And then, it gets so complicated because then if you do the inspections up front like you're supposed to, and now all of a sudden it takes 4 months to get to the settlement table, you're going to redo your WDI, the Wood Destroying Insect, your well, and your septic, because those are only good for 30 days.
Mm-hmm. Not to mention the income documentation will usually expire within that time frame too. So you're gonna have to redo your qualification because the servicer will qualify you too. They want to qualify you to make sure you can afford the payment. And the paperwork process is not the same. There are some servicers who make you do everything paper, and so you got to mail in the documents. You can't do it electronically, and so if you have to do that multiple times because pay stubs are good for only X amount of days before you got to get updated pay stubs, and W-2s typically last a little longer because of the nature of what they are. But it's a tedious process that can be extremely infuriating. You're likely going to miss out on a better house on the time that you're waiting for that to go through.
Well, and also the seller's missing out on the opportunity because they can't go forward on what they want to buy because they have no idea when they're going to settle on the house they're selling. And everybody, like I said, I related to a short sale. It is the most frustrating experience. And I had one guy that was so dead set on finding a house with an assumable loan, but he had a house to sell in another state and he did not have hard orders for this area. And I'm like, there's nothing we can do. The lenders are not going to work with you when you have a house to sell. And it's like, okay, what happens if that house sells and we haven't, we can do put on the market in 3 months? And he's like, well, by the time we get through the, assumption period that it takes with these lenders, I'll have had my house on the market and sold. I'm like, there's no guarantee.
Yeah.
But they're not going to start considering you while you're contingent on selling something else.
Yeah.
You can't buy this house without selling that.
I have a hard time seeing the benefit to the seller in those assumption situations. Like again, there's not a whole lot for you. You're really taking one for the buyer if you're offering up the assumptions, what you're really doing, and that's tough to do.
Literally the only time I cannot come up with a single thing. Even if I was saying, okay, I'm going to move in with my kids. Nope, nope. Find me a good home where they will roll me frequently. No roaches and rats, but don't make me move in with my children. So, there, but even if that was the case where it's like, and in my house, and I was like, all right, but now I'm still paying all the carrying costs of the house, the mortgage, the taxes, the electrical, the water, the sewer, if we have it. And if you're not living in your house, God help you with the insurance costs right now, because insurance on a vacant property is ridiculous.
Oh yeah, yeah. It's so high even if it's not vacant right now. We've seen so many insurance premiums skyrocket lately. To think of what it is just on a vacant home on top of that is just it's nuts.
Yeah. And so I cannot come up with a scenario where it would be beneficial to the seller.
Yeah, I can't either. I agree with you.
You know, because we're in a market where you're going to sell your house as long as it's priced correctly in a reasonable amount of time. It's not the weekend anymore. That's over with. You know, we're in the love child of 2019 and 23. You
Yeah,
know,
yeah,
it's, you know, you're going to be on the market probably 30 to 60 days in some cases now, not just 3 days. Yeah. Unless you're under 400. Um, but there's nothing I can think of. Because even if you're building a house and you've got, you know, you're going to need like 6 months for that, unless you can build that house without selling your own home, that's the only time I could think of that it would work out to do the assumable loan.
yeah. And the quickest I've heard of them being done is still a little over 90 days. So I mean, like, that's still a long time. That's a real long time. So
Yeah,
it's tough to to bite that bullet and do that, especially considering how quickly you could sell it not doing the assumption. It's just it's a lot tougher to do.
exactly. So, well, Matt, I truly appreciate you being my guinea pig today and playing fact or fiction with me. So, because I feel like we basically debunked the vast majority of the myths that I can think of, and then some. And it's so good seeing you again. Hopefully, next time we're in Vegas, I'll get to see you and Jim.
We'll be there. We'll be there.
Yeah, I
So,
know Jim wasn't feeling well. Definitely miss catching up with him. And I know y'all also have one of my previous clients on the back burner that's going to eventually buy with Brenda when all the stars line up again.
yeah,
And yeah, so you'll take great care of them. But
for
I
sure.
truly appreciate it. And thank you for what you do and for all your help today.
Well, thanks, Robin, for having me on. It was fun.